should you take a closer look at the J.P. Morgan Nasdaq Equity Premium Income ETF, ticker symbol JEPQ? Well, short answer is yes, but the good news for you is if you stick around for this entire video, you won't need to do much legwork at all, because I'm going to share with you everything you need to know about JEPQ, including what is JEPQ, how does it generate cash flow, what's the expense ratio, what's the underlying portfolio look like, what type of investor is this a good fit for, and everything in between. So let's get started. Okay, so we're looking at the J.P. Morgan Nasdaq Equity Premium Income ETF, JEPQ. And if you're thinking to yourself, well, this sounds kind of familiar, well, that would be correct. J.P. Morgan also has the J.P. Morgan Equity Premium Income ETF, JEPI. These dividend ETFs are very similar in certain ways, and especially how they generate cash flow, but they are entirely different investments, and we will dive into that shortly. J.P. Morgan would say that this investment is designed to provide current income while maintaining prospects for capital appreciation. And they generate income through a combination of both selling options and investing in U.S. large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. They also indicate they seek to deliver a significant portion of the returns associated with the Nasdaq 100 index with less volatility. For those of you that remember my previous video on JEPI, we took a deep dive in to recognize that JEPI had a long portfolio that included many of the investments of the S&P 500. And then above and beyond that, they had an option portfolio, but they do it in a different way than many other types of dividend ETFs that work with options. JEPQ is also very similar, but they have an entirely different underlying portfolio. As it says here, they are looking for returns that are associated with the Nasdaq 100 index. However, JEPI works with the S&P 500, both with the options that they sell right here, but also if you look at the underlying portfolio, you'll notice that while they only have 123 holdings, they try to replicate the underlying investments in the S&P 500. Here's how the J.P. Morgan website breaks down their investment process. First off, we have the underlying equity portfolio right here. They apply data science process utilizing 40 plus years of J.P. Morgan proprietary data to create a fundamental framework, blah, 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 blah. Essentially, they have an underlying portfolio that aligns with the Nasdaq 100, but they don't own all 100 Nasdaq 100 stocks. You'll notice they only have, as of October 19th, 83 different holdings, so not 100 as in the Nasdaq 100. And some of the top investments here are Apple, Microsoft, Google, and Amazon, followed by Tesla. And we'll talk about what these NDX underscore investments are. So there's the underlying equity portfolio, and that is where some of the capital growth comes from, as well as some of the cash flow, because some of these investments do pay stock dividends. And then above and beyond the underlying equity portfolio, then we have the options overlay. To generate additional cash flow, JEPQ will sell 1 month out-of-the-money call options designed to generate income and give investors a portion of the upside with reduced volatility. Now, right off the bat here, one of the things I just don't like that much is the fact that they're kind of ambiguous when they talk about 1 month out-of-the-money call options. What does that actually mean? They do tell us 1 month options, but they don't tell us how far out of the money. Are they selling 5% out of the money, 10% out of the money, 2% out of the money? Out of the money can mean a lot of different things. And while it does allow for additional capital growth because these are out of the money options, we just don't know how much out of the money they actually are. And I looked through all of the investment documentation they provide, the prospectus, the annual report. None of those documents indicate exactly what type of percentage they're looking for. Now, both JEPQ and JEPI, for that matter, really approach options writing strategy in a different way than all other types of dividend income ETFs that work with options. Many others will just tell you flat out what specific option they work with, especially the Global X funds. They tell you, we bought this fund right at the money, this is the strike price. Whereas with JEPQ and JEPI, if we look at the portfolio, we'll notice that these investments, there's these investments here, the NDX underscore 4, NDX underscore 3, 2, 5, and 6. NDX happens to be the Nasdaq 100 index. So these clearly are the options that they're writing, but what these are really called are equity linked notes. And this is where I learned more about that under the fund's main investment strategies right here in their summary prospectus. It talks about how they achieve this objective of seeking current income and capital appreciation by creating an actively managed portfolio of equity securities comprised significantly of those included in the fund's primary benchmark, the Nasdaq 100 index, and number 2, through equity-linked notes, ELNs, which are selling call options with exposure to the benchmark. They give you further information down here where they say the ELNs are owned by the fund are structured to use a covered call strategy and have short call positions embedded within them. So instead of writing the options themselves and holding those in the portfolio, instead they have a wholly separate investment, these NDX_, these equity linked notes that are writing options, and they own those equity linked notes instead. So they still capture all the option premium, they just go about it in a different way. I'm not sure if they're trying to obscure their strategy and do this so that no one else can replicate their strategy. That could be it. But it is definitely a unique way of holding options. So the simplest way to think of this is JEPQ is comprised of a long equity portfolio, meaning they own individual stocks that are part of the Nasdaq 100 index. They don't all own all 100 of them, but they own a portion of them, and that's where that whole applied data science proprietary data to figure out which ones are the best ones to own. And then above and beyond that long stock portfolio, they have an option strategy where they sell out of the money 1 month call options, which they own in those equity linked notes, and those generate cash flow above and beyond the dividend income that are earned on a monthly basis with the stocks that are owned in the portfolio. Here's their dividend yield right here as of September 30th, 2022, 15.95%. And the reason why that dividend yield is high, first off, because many of the covered call ETFs out there, including, QYLD, RYLD, JEPI, JEPQ, they're just going to have larger dividend yields because of this extra option income. But above and beyond that, we have depressed market prices right now, and whenever we have depressed market prices, we have elevated dividend yields. So that's part of the issue. One of the big things that investors in JEPI liked that they will also like with JEPQ is the fact that they have monthly dividends being paid out. This fund was launched in May of this year, so it doesn't have a huge amount of history under their belt. But we've got here payments in June, July, August, September, October. The fund does have an expense ratio of 0.35%. However, this is lower than many different dividend ETFs that work with options. Now, one of the big keys that JEPQ talks about here as part of their options overlay is they give investors a portion of the upside, but they also have, keyword here, reduced volatility. So let's take a look here and see how JEPQ has performed year to date so far compared to both JEPI as well as QQQ, which is the Nasdaq 100, to see just how that volatility shakes out. You guys know I have my monthly dividend stock spreadsheet, and you can make a lot of high quality decisions based on that data. Here's a little secret of mine though. Sometimes I have to double check the data I get from my data provider before I put out the spreadsheet. And to do that, I always go to Seeking Alpha. Their interface is excellent, and the dividend data they provide is top-notch. For the average Joe investor audience, Seeking Alpha has an exclusive offer on their Seeking Alpha Premium service. With Seeking Alpha Premium, you get access to earnings call transcripts and audio, which I find very helpful in getting a gauge on how committed to the dividend a management team actually is. You also get access to Seeking Alpha's stock and quant ratings, unlimited access to their analysis articles, and their exclusive dividend grading system. The full retail price for Seeking Alpha Premium is $239 per year. But with my referral link in the description, you get this service for only $99 for the first year. Try it free for 7 days and see if you like it. Again, the link is in the description below. Try out the Seeking Alpha Premium service today. All right, here's a chart of JEPQ and QQQ from the origination of May 2022 for JEPQ for both investments all the way through today. The dark blue line is JEPQ, whereas the purple lighter line or thinner line is the QQQ, the Nasdaq 100. And you'll notice here that we do see less volatility. You'll notice that the lows experienced right here during early parts of May and June were lower with QQQ than what we saw with JEPQ. And then when the rebound occurred, we do see that we did see a much higher high with QQQ. We expect more volatility with QQQ, and if you own both of these investments long, you can expect that the price of QQQ will advance past JEPQ. Though the fund return over the long term will be impacted by whether or not you reinvest your dividends with JEPQ. And you can see that year to date, they're pretty much almost exactly the same, with an 18.1% loss for JEPQ and an 18.9% loss with QQQ. And if we were to look at the historical results for JEPI compared to the S&P 500, we'll notice very similar results, but on a longer track record. We have less volatility with JEPI, pictured here in blue, compared to the S&P 500, which performed worse overall in green. So what type of investor is JEPQ a good fit for? Remember that this type of investment is meant for cash flow right now, and it's an elevated level of cash flow and some capital appreciation. I've gone on record in the past in saying that investments like QYLD, RYLD, XYLD from Global X were not a great fit for investors looking for long-term growth because they really cap growth and focus more on an extreme level of cash flow right now, and that was a detriment to the overall share price of QYLD and those other investments. JEPI has not had that issue. They still provide elevated levels of cash flow compared to other types of dividend investments, but they also participate in growth in the overall market because the options sold in both JEPI as well as JEPQ are out of the money options. So you could definitely make a case here for holding this type of investment, even if you're holding for growth for a longer term, though I still am a strong advocate for holding other growth investments, such as just a low-cost index fund, such as the S&P 500 or QQQ for the long term if you're looking to keep things simple. However, if you're midway to retirement, maybe you're trying to start transitioning some of your investments into cash flow investments and you still want to participate in some of the growth, then an investment like JEPI and JEPQ from J.P. Morgan are probably going to be a better fit for you because, again, they balance cash flow and capital appreciation. And because their strategy is ambiguous in nature, they don't tell you exactly what percentage out of the money they write their options, that leads me to believe that they have the autonomy, that they have the discretion to make those decisions as markets change. As there's volatility in markets, maybe they write farther out of the money or closer to the money to take advantage of those market conditions. Now for me personally, full awareness here, I do not own JEPQ, and while I have held JEPI recently, it's not an investment that's a good fit for me because I'm really focusing on selling a lot of option premium as part of holding quality dividend stocks. However, it might be a great fit for you. Make sure to leave your 2 cents down in the comments below. Let me know, was this a good value to you? Did you learn something new about JP Morgan's JEPQ Dividend Income ETF? Do you want me to cover other types of investments in the same way? Make sure to leave those types of investments down in the comments below, and I might have an opportunity to review those. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.